Welcome to Short View Trading. It's Monday 17th of October, around 9 a.m. London time. So if you're a trader of equity index futures, you trade the S&P 500 futures or other key equity indices around the world, what do you want to think about when you're thinking about a 1 to 2 week time frame? You're a swing trader. What are the factors you want to look at? How should you go about making a decision whether to be long or short equity index futures over the next week or two? That's what we want to talk about in this video. That's what we're going to dig into. Well, it was another volatile, choppy week in equity markets. We saw lots of toing and froing in the major equity indices over the course of the last week. And with that, there was significant volume traded. If you look at the S&P 500 E-mini volumes, this is the chart we're putting up in front of you now. Here we show you the latest, what it's been doing on the latest trading sessions versus what is the sort of normal range of volumes at this time of year. So as you can see, it's been very high in recent trading sessions. Market participants have been active, and we've seen a lot of stock move from weak holders to strong holders as people accumulate positions at around these levels on the S&P 500. But actually, whilst they've been choppy, these markets, over the course of the past week, they're largely sideways. In fact, if you look at the weekly performance of the S&P and other US equity indices that we're putting up in front of you now, the majority of them were sort of sideways or off a bit. The S&P 500 off just over 1% last week. A number of the other indices sort of flat, and tech was the area of the marked weakness. The Philly stocks, the Nasdaq down sharply, but other parts of the market up. That is, if you look within the S&P 500 itself. So winners and losers in the subsectors, but overall markets fairly flat but choppy. Equally, if you look over in Europe, it's pretty similar. Most markets flat or up a little bit or down a little bit. And one or two exceptions there, the FTSE 100 and the Dutch market, which of course is quite tech heavy for a European equity index. So the key question is, where does that leave us in terms of equity index futures? Where are they going to be heading over the course of the next week or two? And that is exactly what we dig into in detail in our daily rag that we publish each and every day on the website to subscribers, or equally, if you'd fancy a free trial, please click on the link below. We'll send you the daily rag for free for a bunch of trading sessions. No credit card details required, just your name and email address. But one of the sort of things we look at in the rag is things like the VIX, the volatility index. And what's fascinating about this market over the course of the recent trading sessions is it's been fairly sort of base building, fairly flat over the course of October. And what we've seen is we haven't seen a new high in the VIX, having made a spike higher in late September up to the sort of year-to-date typical highs, as you see on the chart in front of you now. The VIX has really rolled over and not made a new high since then. That's encouraging. Volatility isn't picking up. And indeed, it's slightly softening. And in fact, if you look at the VVIX, which is the volatility of the VIX itself, the VIX's volatility has been softening, as the VVIX shows you. So they're pretty encouraging signs. They're typical of base building, typical of what we've seen over the last couple of weeks. Yes, it's still choppy and volatile, but you're not getting new highs on the VIX or indeed on the VVIX. So as I mentioned, if you're interested in hearing more, the detail of our models each and every day, our updated view on the equity index, our updated recommendation on a 1 to 2 week time frame on equity index futures, please do take a trial. Or if you're a subscriber, please see the daily rag that you should have in your email inbox as of this morning. So what are we watching this week? Well, there's a ton of stuff going on. The US earnings season is really just getting going. It kicked off in earnest on Friday with some of the banks' results. There's a few more banks and Tesla as well later this week. Netflix, a ton of US companies reporting earnings. They'll be watched closely and of key interest to market participants. Over and above that, there's a bit of an inflation theme with Japanese, UK and Eurozone CPI inflation over the course of this week. There's a Chinese theme, a lot of data out over the course of this week. We, of course, had the Chinese Congress over the weekend. That continues as we go forwards through this week. And then on top of that, we have a bunch of US housing data, NAHB, existing home sales, starts and permits. So a bit of a significant broad update on the state of US housing over the course of this week as well. Added to all of that, of course, we'll be watching all the price action, all the key levels, equities, Bitcoin, bonds, the currency, and so on, financial conditions, and so on and so forth. So that's it from us. That's your morning market here for Monday, 17th of October. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and do like and share on social media, or follow us on Twitter and or LinkedIn, or indeed on Facebook. Thank you for listening. Stay safe. Trade well.